Very good evening to all our mentorship traders. 7th of January 2022, Friday evening. This is our mentorship invest meet. Like always, we are going to talk about the index, how the market fared this week, what can we expect next week, and then the next half we will move on towards trading opportunities. I am taking a look at the daily chart of Nifty futures. First, let's take a look at the weekly time frame. And we have 2 weeks of bounce back, positive 2.5% gain, 444 points in this week. And as I was kind of repeating in my recent videos, that this is much more than just a short-term bounce back, and so far so good. It is proving itself like that. Little bit of slowdown in the last 2 days, small bodied candlesticks, spinning tops kind of a behavior, which is fine, which is obvious because we had a great run. 650, 750, 17,650, 750. If you remember this level, an old level of ours, which was earlier supports, then resistances. We expected some resistances this time, but not at all. In fact, it has acted as a very good source of support now. This is a very encouraging sign, this one. The fact that yesterday the index bounced from the level of 17,685. However, some bit of volumes have started to develop here. Are these signs of redistribution? Maybe, maybe not. Let's see. But few facts. Thanks to this move, the short-term trend, the intermediate trend has turned up. The trend reversal came with very sharp high momentum movement from the index, especially from the level of 17,250 all the way towards inching close to that 18K. So this was high momentum, one way, parabolic move. So it should slow down. And this slowdown is behaving like a symmetrical kind of a triangular behavior on the 75-minute time frame. There you go. This is what it is behaving like. Nice uptrend, and you can see the volumes that I was mentioning from the daily time frame clearly getting reflected here. In fact, a big volume bar in yesterday's gap down. Was it volatile? Yes, over the last 2 days it has been volatile, not very fertile times for short-term trade traders on either direction of the market. But what can we expect? For this uptrend to sustain well, to hold on to itself well, it should not give away back its recent gains and not slip below 17,500, which is essentially these current highs, previous highs, I'm sorry. This is the red line is the anchored VWAP from the all-time highs. It has taken that out level really well, and it has come close to the 2 standard deviations. So this is around 17,500, 550. This is the level that it should hold. It should not drop below that. The chances of 18K and much further upside will persist as long as 17,500, 600 is held. So maintain a bullish bias on the market and look for buying opportunities early next week as well. Bank Nifty did really well. This is, I think, what we were calling for. We were calling for the fact that if the index has to show strength, then the banks have to participate. And thankfully, in the last 6 days of trading, we've seen that coming from the private sector banks, the PSU banks across the board. This is an interesting zone for the Bank Nifty, this red zone. Earlier, we had drawn it based on the point of control from these 2 time frames. There were previous highs from where the sharp sell-off came. It was earlier previous lows as well. So this is where the index is dealing with right now, and very likely it is likely can slow down. It's unlike the Nifty, which was like a symmetrical triangle. This is more like a channel, like a parallel channel, and it can give us a breakout on the upside. This index too has taken out its anchored VWAP really well, and short-term supports kick in close to that 37,200 level. So what do we have from these charts of these indices is trend reversal, number 1. Number 2, decent resilience that it held on to its trend reversal. Participation was there. When the IT declined, the banks picked up. So nice sectoral relay is also happening. Overall, looks good. Looks good. And as I had mentioned in my earlier one of my earlier videos, that it's more than the price. I think the sentiment is definitely improving. I hope that it holds on to these levels, and then we can expect further upsides. But who knows? I was quite surprised, if you allow me, was quite surprised to see how the S&P 500 and the Dow Jones behaved this week. Well, not surprised, but quite astonished by this particular red day. Recent sell-off in the US markets have been fierce. Fierce, I think, would be the right word, and equally fierce bounce back. Now, what catches my attention on this day's sell-off, is this is a clear, confirmed sign of breakout failure. The breakout day was this one. And the very next day it failed, and it was a clear-cut breakout failure. These kind of breakout failures, the index, the US markets, it's prone to. This was the recent breakout failure. This was almost an intraday breakout failure. And generally, whenever we have seen this kind of a movement from the Dow Jones, this is S&P 500, on a high to low basis, we've noticed correction in the tune of 4 to 5%. So far, from on high to low basis, the S&P 500 has corrected 3%. So can it correct 2 more %? Maybe, possible. But it's a breakout failure, which means that it has a high chance of dragging itself further down. And this kind of a negative global Q, if at all, can lead to weakish opening for our markets on Monday or Tuesday and going forward. The structure is positive, the trend is positive, the trend is holding itself pretty well. We have seen participation coming in, but it's this kind of global market driven opening that might lead to a little bit of damage. That's exactly what we saw yesterday, the gap down. Should we quickly take a look at the RRG graph before I move on to your questions? NSE sectors, RRG, this is the stockcharts.com. And if I change this underline to Nifty and update this on a 1 week basis, you have gains coming in from banks, private bank, PSU, financial services. Notice that their tails are mostly in the lagging zone. Weakness came in from pharma. This was the sector which bounced back first in this recent bounce back, and then IT. Going back to like a 12 weeks, it is essentially IT which is the strongest, which has just bounced back extremely well from the weakening back to the leading sector. Small and mid caps have been doing good, and then we have PSU banks and mid caps, small caps coming in. Over the last 12 weeks, it's the real estate which has had a very big drop in relative strength momentum. I would like to spend a little bit of time on the real estate sector. Sectoral indices, if we take a look at CNX Realty, which is this one, you would notice that it's coming off in a zigzag manner. One correction, then the bounce back, then the second correction, and this is the next bounce back. Generally, corrections are ABC, three-legged, maybe at times more than that. Now, the million-dollar question comes in, what will happen next? Is this going to lead to a trend reversal or further sell-off on the downside? Weekly charts, that is one time frame higher from the daily, suggests a pretty strong uptrend, suggests pretty good supports kicking in at the levels of around 440. This is the CNX Realty. But a beautiful doji kind of a behavior on the weekly time frame, which clearly reflects consolidation, which on the daily time frame is this complete flattish behavior. And so short-term triggers for any kind of weakness for real estate or the realty index comes from below Thursday's low. So you can keep an eye on Thursday's low and I think Monday's high. These are the two important levels which the index needs to take out, which may corroborate to some important stocks that you might like to keep a close look at is DLF. DLF on the downside, if you notice Tuesday, Wednesday, Thursday, you will notice that the lows 391, 392, and 391. So 391, 390 is an important level for DLF. And this is for the trend line traders. This is essentially the trend line or the trend line breakdown that one can look at. But the stock has gone through a fair bit of multi-legged correction, once and then twice and then thrice. So A, B, C, D, E, and so on and so forth. So if the real estate corrects, if the real estate kind of shows any kind of weakness, remember to put in these levels. They are a couple of percent from the CMP, from the current market price, but yes, below 390, DLF is one. Godrej Properties has not managed to bounce back as well as DLF has. DLF's bounce back has been far superior in relation with Godrej Properties. So this is a weakling, and you can keep a close look at Godrej Properties also. I'll end today's market wrap by saying that if we see any kind of nasty surprise on the downside next week or the week after that, if the global markets create any kind of negativity, not only just in terms of opening of the market, but follow through as well, then all eyes should go back to the bank Nifty and the private sector banks also, because in terms of relative strength, they were the weakling. They had amazing bounce back, and the best thing about this amazing bounce back is it has taken out its previous swing highs. This is a very, very good sign from the private sector banks and bank Nifty. If the index gives away this, then I'm not saying it's going to correct and go back to its previous low, but high possibility, a very, very high possibility is that it will kind of stay range bound, which will give you enough, which will give the short-term traders enough opportunity to trade on both the sides of the market. What I'm essentially saying is, if I see any kind of nasty surprises or weakness from the market, if at all, if it comes, then I think banks, private banks, real estate can be one such pocket to keep a look at. All right. Okay, so let's move ahead now, like we always do, and let's quickly discuss the stocks which are there in your list tonight.